Hi, this is Joseph. It is March 16th, 2020. The stock markets are officially closed, and we're going to take a look at the daily time frames. Before I begin, though, I'd like to say I'm here for you. If you've got questions, if you've got concerns, if you're worried about, I've been receiving a lot of messages about people losing their money, uh, retirement funds, 401. Some people have already been laid off. They want to take trading a lot more serious, and I don't blame you. Certainly, when you learn to trade, or if you're using my trade copier, it's an opportunity to make extra money, to make sure that money keeps coming in. Obviously, you're going to have to leave some money in your trading account, but please be very careful. And if you've got questions or concerns, I'll do my best to help you and to answer them and to guide you and steer you in the right direction. Um, Now, that being said, I want to say, first of all, let's not try and think about fighting, the markets and the directions and the movements that we see here. I've been saying this for a while, and I'll continue to repeat it. We have to be careful. We've got to be mindful that, as people are trying to call the bottoms, typically in a scenario like this or a crisis, market collapse, meltdown, whatever you want to call it, it continues, and it will usually bottom out when people stop talking about where's the bottom, and people are trying to find different levels. Obviously, technically, I'm going to look to try to find and determine my own levels in the stock markets and with the currency pairs that we trade. But other than that, when we look at it on a daily basis, like we're looking here at the pound dollar, when we see 4 or 5 days in a row like this, in other market environments, it's easy to look at it and say, well, we're sort of due for a bounce, and then you might find some kind of a technical support level. But you'll remember this chart over the weekend. I mean, it was just a little more than 24 hours ago that we were talking about this one, and I pointed out the different extension targets and price levels that I would continue to trade the pound dollar to. The final target here is 1.1915. And back when we were talking about this during, let's say, January and December, I think a lot of people had a really hard time imagining that it was actually going to do something like that. And when I look at the stock market, I look at the Dow, I can see that there's the technically, and I trade technically. I think that it's I think most of us do. That's why you're here. That's why you follow me. And I think that most of us can see some of these technical levels, and the Dow can drop a lot more. And so can some of these currencies. These currencies can continue to move and drop a lot further. And I just don't recommend fighting it. Also, be really, really careful with trading the open at the start of the week. Trying to fill those gaps. We talked about that over the weekend. A lot of people will, talk about they talk about certain strategies that work in normal trading environments and that are relatively easy to execute. But once the market changes, people continue to try and execute those trades, and that's where they get stuck. Back in 2008, for example, when I had my chat room, I remember specifically, I started my chat room back in 2007, but in 2008, I had some guys join my chat room. They were from San Francisco area, and they had a small managed fund, and basically their strategy was the carry trade. And when the carry trade started to unwind, and this was obviously during a normal market environment, things were just pretty much going in one direction. It's kind of like every other bubble, every other market, even the real estate market. When things are going up, people expect them to continue to go up, and they're not looking at the signs, and they don't care, and they don't want to hear that there's some potential meltdown that's going to cause them to reevaluate their strategies, and they're going to have to plan for things in a different way. Well, these gentlemen that were operating this managed fund, they didn't have any other strategies. They didn't have any other methods, so they went all over the internet to try to find somebody who would help them. And I was calling out trades every day, and they ended up becoming personal, private coaching students. And I was shocked and amazed at how hard it was for them to let go of the one single trading strategy that worked when everything was normal and everything was okay. And then the minute the market changed, which they weren't prepared for, it really forced them to reevaluate their trading, and they lost a lot of money. They wouldn't let go of their trades. So be careful. When we see a lot of these gaps with the market opens on Sunday or Monday, depending on where you live, most of them are relatively easy to trade and they'll fill. But again, I talk about this all the time. Be careful, be mindful as to what's causing it. So again, we don't want to fight this. We don't want to resist it. We think, and I expect that it's still likely to continue a lot lower. I mentioned that, along the way in a trend, we should expect some kind of a bounce or retracement day in the opposite direction of the trend. It could last one day. It could last 2 days. It isn't going to necessarily change the direction or immediately print or indicate that it's the low or the high, depending on what you're trading, and that everything's back to normal. Again, these currencies, the stock markets, they can continue and drop a lot further. So anticipate that, prepare for that. You're going to do a lot better trading in the direction of the overall trend. But again, the fact that I say that, you might be prepared to sell tomorrow, let's say here on the pound dollar, and then tomorrow could be the day that we get some kind of a bullish retracement day or some kind of a little bounce, and then that bounce right there in itself, because of the distance that these currency pairs are traveling in a 30-minute bar or a 1-hour bar or even the daily bars, we're seeing price cover a greater distance than it has in quite some time. If you look back over here in this range of consolidation from January and February, you can look at these daily candles and determine the daily average trading ranges, and then notice how fast everything is accelerated on these daily candles here for the last week and a half or so. And that is happening across the board. That's happening in most markets, and you need to be mindful of that. And the fact that we're seeing bigger trading ranges means that if you're used to using a small stop for day trading when it's normal like this and the ranges are smaller, you're likely to get stopped out pretty quick. Like I was watching it all morning. I mean, I was tempted to trade myself the first London breakout strategy, and then I could see that it was likely to. I could see based on the way that price was moving at the time that the London market opened, that it was likely to create some kind of a head fake move. And the first initial move was a head fake. It would have been a failed trade. And then price rolled over and then started to drop. And then it would bounce and turn around and come back up about 38 pips. So if I'm going to get into some of these trades and I'm going to use a 20, 25 pip, 30 pip stop loss, as I normally would in a normal trading environment, this trading environment that we're presently in and trying to trade in isn't. I mean, a 30 pip, 35 pip stop loss is not likely to keep me in the trades in most of these on most of these retracements. So be prepared. Be mindful of your entry, and your timing is everything right now in this market. And the only way to avoid it, if you don't want to accept using a bigger stop like 80, 90 pips in some cases, I mean, literally, that's what it's taking in some cases, in some situations, depending on the timing and the time of day that you decide to get into some of these trades. But if you don't want to use a bigger stop loss, then the alternative is to just stay out of the way. And I know that that's a hard thing to accept, because you're probably here making money. I mentioned at the beginning of this, people are already reporting losses, layoffs, and cutbacks. Business owners, I've got some coaching students that are business owners, and they've already had their business. One guy already closed his business. He already closed things down, and he had something very similar happen to him back in 2008. So this isn't going to be over anytime soon. Not in the next 3 or 4 days. So prepare for the worst, and hope for the best, and realize that if you're not willing to risk more on your trades, you may have to pass on some of these trades as they start to move around quite a bit, and there's more participation in some of these retracements. In the blink of an eye, I turned around and I was watching one trade that I was considering, and it retraced against what I would have considered a trade. More than 38 pips. It was about 32 pips, and then it went to 38 pips. And I thought, wow, I would have probably put a 35 pip stop loss on a trade like that in a normal environment. So again, I see some of these setups and I want to trade them. But if I think that the retracements are going to be really strong and move fast against, the pattern that I see, then I'm going to have to stay out of the way. And it's a good idea to stay out of the way in a market like this. I know a lot of people are want more trades and you want more money, but in my opinion, in this type of environment, the best thing that we can do is look for the better trading opportunities. Be really mindful about our entries and the timing of those entries. Meaning, what session are we trading? Is there a lot of activity at the time? Are there comments and statements and tweets that are going to have some kind of an impact? And then the other issue is, I would rather have maybe 3 or 4 or 5 trades this week that were all winning trades, as opposed to 17, 18, 19 trades and having half of them winning trades and half of them losing trades and end up going nowhere. That's a stressful environment to be in. Eventually costs are going to accumulate when you're trying to trade like that, and just the costs alone in executing trades are going to eat up, the balance, and you'll end up with less in some cases. So be really careful, be very careful, and then be really careful of the people that are out there saying, buy or sell, this is the bottom, this is the top. Pay attention and try to determine, if you're listening to some of these people on Facebook or on YouTube, how much experience do they have? Have they traded during crisis events like this? Do they know what they're talking about? Do they sound like they know what they're talking about? And can they answer your questions correctly and try to protect you? Again, if anybody's saying that they see a bottom and they're calling the bottom here, they're guessing. So be really careful. This can go on a lot further. Again, we have to be prepared for some of these retracement days, but be very, very careful here.